You'll have to divide the picture into two parts and you can clearly demarcate them. For the better part of this year, what have we said? Okay, it's all about India and less about global. But I think the reverse or the mirror image of that is now visible. Let's first establish where we stand in terms of the world. The backdrop which everyone has is that there is problem in China, there's problem in Middle East, there is reversal in China, flows will move out of emerging markets like India, and that in a sense will lead to market volatility. Now that's history now. The strength in global markets is absolutely impeccable. Dow last night has made a new high. The direction of crude is headed lower. 10-year yield is now firmly fixed in and around 4%, and even the European markets now, post that rate cut, they are limping back to normalcy. So globally you would say, okay, the setup is picture perfect, which is volatility is not gone up, markets are in a clear uptrend, commodity prices are lower, yield is moving in a manageable band, and there is nothing negative which so far has come from any of the large macro data points. By the way, Nvidia last night touched a new all-time high. For me, that is a pivot of what markets are betting on. I mean, if a company which is the poster boy of this bull market in US, and that is moving from strength to strength and now nearing $4 trillion, it just tells you that what the global setup we are in. So I think globally the strength is absolutely impeccable and quite extraordinary.
Yeah, the only distinguishing factor from our markets to perhaps what's happening in at least the Western markets, because even Asia is really a mixed bag, so to speak, is that the Western economies are definitely easing off on rates. We saw that from the Fed, and now you had the ECB as well follow that. In fact, they've cut the rates by another 25 basis points for now a third consecutive time. So that's sort of adding a little bit of a fillip to their markets. For us, of course, while we continue to be in a range, but needless to say, we've seen some decisive breakdowns. And yesterday, you had a conclusive break of that 25K mark, Nikunj. The fact that we actually closed in pretty much at the day's lows, it was a good 200-point knockoff. You can't sugarcoat, the kind of weakness that's creeping in for our markets.
See, we use the word time pass for Nifty, and I think it will remain like that. But frankly, it's no longer time pass for individual stocks. Yeah. Now, for the first time, you could say there is a bit of a wrinkle or a genuine concern which has come. Now, let me first establish Nifty here, and when we'll talk about the market at length. That's the 11 session market range for you, just 1,000 points. With so much which has been thrown at the market in terms of global news, local news, earnings, FI selling, the markets are simply stuck in a range. It may continue for some more time. That's largely because of the supply-demand dynamics what we have. The SIP flow number which came 3 days ago. Then you have FI selling which is capping the upside, and you've got DI buying which is down, which is giving it a downside. So the Nifty, I guess, is stuck in a range. It may continue for some more time, but it is not an instrument where you will see any kind of a directional cue coming from for the market. But for the markets, for the first time now, you are getting what could be called as genuine concerns which are centered around earnings. Yesterday, Havells numbers were not great. Bajaj commentary was just about okay. Nestle did not do anything very great in terms of exciting the market. IT numbers, they don't warrant an upgrade. Reliance got a downgrade. None of the earnings so far, in a sense, are keeping pace with what the market levels are. So is it a slowdown? Is it adjustment to earnings, which we've been talking about? Or there is a genuine fear which seems to be coming back about where valuation versus earning mismatch is moving, whatever may be the reason. But I guess markets in the near term are getting jammed, and individual stocks, the ferocity which they are correcting, it clearly appears that markets right now are looking bad news with a weak bias, and good news is getting ignored. So where do we go from here? I guess that's the most important point. And the factors which are dragging us down, I think, is earnings season, FI selling, and a large IPO. That has got us down. What is the out of jail card? The out of jail card cannot be global, because global strength is already there. So if you had to come back with global strength, you would have come back, right? That has to be something else. What can be that something else? I think it would be end of earnings season and maybe some kind of indications from festival season.
Yeah.
Because how would you see if you fell because of global markets are up. Problem over. But you're still falling.
But then there's also that FII relentless selling as well that we've been witnessing.
3,000-4,000 crore you can manage because you managed it for the better part
For
of
a
the whole year.
Yeah.
I think for the first time there is fear of slowdown. Bajaj Auto, poor commentary. IT, there are gaps to be filled. Nestle, nothing great. Havells, Kia Industries, nothing great from those companies also. So those are the concerns which are coming.
And also the problem is that it's kind of an overheated market. You know, all the stocks that we've been talking about, be it a Havells or for that matter, definitely Bajaj Auto, they're all sitting at their peak valuation. So therefore, the scope of disappointment is larger if they fall short. Even a slight miss on the earnings and you had, you know, Bajaj Auto shave off what, almost 10, 12%? Yeah, 13% finally on futures.
And you know, it's not a slight miss, Aisha. There are marked divergence in the opinions, commentary and what the estimates were. When there's a marked change, Bajaj Auto is a marked change.
For a stock which is sitting at that kind of valuation.
So that's the problem. So what is the out of jail card? The out of jail card is that you would hope that, okay, when banks, I think banking numbers will start next week, that those numbers will be better. And maybe you will get some kind of an indication that unlike Dussehra, Diwali is better. Those are the two factors which I see in the near term which could help the market go higher. But otherwise, I think it's not a market where you want to really put money to work. I mean, if you're trying to say that, okay, what should be the strategy? Not the time when you say that, okay, I'll start buying the decline. Let the market adjust to the earnings downward revision and then you need to enter. There is no point in trying to just go against the tide right now because the earning downward revision has just about started.
Okay, that said, let's also throw some more light on what's really happening within the IT sector now that all the big boys are out with their numbers. And, you know, while they're eyeing that BFSI turnaround, the nitty-gritties are quite a mixed bag because TCS is saying that the headwinds should normalize by third quarter now of the fiscal. They're saying that the biggest vertical, that's banking and financial services, did show signs of recovery. Infosys is saying that BFSI saw good growth in the last 2 quarters. They're saying margins are going to improve over the midterm. Wipro confident of maintaining margins, but in a narrow band. They are seeing signs of growth in the BFSI segment once again. And for HCL Technologies, they're stating that they did see better demand in the second quarter and that BFSI saw the strongest growth. So yeah, banking and financial services is the kind of wild card now, or the out of jail card as you call it, at least for the IT pack.
But that out of jail card is not good enough for the entire IT basket per se to get re-rated. So while the direction seems to be positive, the business is not contracting, but minus BFSI, especially for let's say Infosys and even for Wipro, the growth is still very anemic. The deal win volatility is there. The guidance what everybody was expecting, let's say from Infosys or even from Wipro for the next quarter, is not big bang. So there is nothing big bang. You know, when stocks are at an all-time high, you need what is called as a big bang moment for them to go higher. And that big bang moment is missing. These are stocks which are still growing, or companies which are still growing in the range of about 5 to 7%. If you're growing in the range of 5 to 7%, you will not trade at commanding P multiples of 20 plus or even 25 plus, and that is where I think the market is. So growth is okay, nothing big bang, no re-rating, deal will volatility, but the valuations will ensure that the upside gets capped, and the way some of these companies are doing bonuses, buybacks, that will also decide to cap the downside. So, I mean, what can I say? Just IT companies have come and gone, and market reaction has just been muted.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.